Welcome to the Deep Dive and welcome to TalkTickers. We're your direct line into the key takeaways from earnings calls.
That's right. And today we're zeroing in on Constellation Brands. This is their Q1 fiscal 2026 call.
Yep. Our mission, as always, isn't just to skim the surface. We want to figure out how this beverage giant is, well, navigating this pretty uncertain economy.
And maybe even shaping things a bit. We'll look at their brands, their innovation, maybe some financial strategy that sets them apart.
The call had the usual suspects: CEO Bill Nuland, CFO G. Henson, and Joseph Suarez introduced Blair Vinma, the new VP of Investor Relations.
Right. Blair's got a solid background buy-side analyst, plus a decade inside Constellation across different finance roles. Knows the business.
So what was the headline? What did we hear from management right off the bat?
Well, the main thing was a pretty firm stance on their outlook. They actually affirmed their full-year beer revenue growth and margin guidance.
Okay, so Q1 came in basically as they expected.
Exactly. Even with, those ongoing consumer concerns we've been hearing about for quarters now.
And wasn't there one less selling day, too? That usually throws things off.
Yep, one less selling day. But they still hit their internal plan for Q1. Management sounded pretty confident about hitting the full-year numbers.
What makes them so confident? Are they expecting things to pick up?
But they are. They anticipate sequential improvement through the year. Plus, they've got easier year-over-year comparisons coming up as we head into summer.
Okay, easier comps always help. But still, affirming guidance feels strong right now. What's underpinning that confidence, especially with those headwinds?
Yeah, it does seem strong. I think it comes down to a few things, like their financial management and their brand strength.
Let's talk financials first, then.
Yeah.
There was mention of a new aluminum tariff.
Right. An incremental one went into effect in June, so it didn't actually hit Q1 results.
Okay, but it will impact the rest of the year.
Yeah, they're expecting roughly a $20 million hit for the full fiscal year. That translates to about 20 basis points on margins.
20 basis points, so 0.2%. Not huge, but nothing either. Are they offsetting it somehow?
They said they don't expect a full offset, but they still project delivering margins consistent with what they outlined back in April.
Interesting. So they must have some other levers they're pulling, maybe efficiencies or pricing power.
Seems like it. And speaking of managing external factors, their hedging policy, especially on the Mexican peso, is pretty interesting.
Right. The peso's been volatile. How are they handling that?
Well, they started the year already pretty well hedged, low 70% range.
Okay, that's proactive.
And then they opportunistically added more hedges during Q1. Now they're standing at over 80% peso hedged for this fiscal year.
80%. That's significant coverage.
It is. And what's really strategic is they've even extended hedges out into fiscal 27 and 28.
Wow, locking in rates that far out.
Exactly. Capitalizing on what they saw as favorable currency movements, management kind of hinted they think the peso might be a little bit overvalued right now, maybe due to dollarization.
But their hedging basically takes a lot of that risk off the table.
Pretty much. It significantly limited the material impact on their numbers.
Okay, so they're managing the specific financial pressures. But what about the bigger picture, the macro environment?
Yeah, they're definitely watching that closely. They talked about seeing reduced GDP growth expectations, softening inflation, unemployment, interest rates, the usual signs from banks and the Fed.
Do they sound worried?
Yeah.
Or just aware?
More aware, I'd say. They acknowledge there's a significant amount of guesswork involved, especially around things like potential future tariffs or maybe government layoffs affecting unemployment numbers.
A lot of unknowns. How does that uncertainty filter down to their view of the consumer?
That's really key. They spend a lot of time on the consumer, particularly the Hispanic consumer, which is, about half their business?
Roughly half, yeah. A critical demographic for them.
And they said loyalty among that group remains very strong, actually increasing in the general market, too. Brand health measures are holding firm.
But are people buying less? We hear about consumers pulling back.
It's nuanced. They said overall visits to stores might be down slightly, but the spend per visit is actually up.
Okay, so fewer trips, but bigger baskets when they do go.
Kind of, but for beer specifically, they clarified something important. They think the observed decrease in consumption isn't because people don't want beer anymore.
That's not a lack of interest.
Right. They believe it's more a reduction in the occasions for drinking beer. Maybe less dining out, fewer casual gatherings at home because of budgets.
Ah, okay. Fewer beer moments, as they might say.
Exactly. And they anticipate a return to more normal behavior, more occasions, as the macro conditions eventually improve.
That distinction between occasions and interest is critical, isn't it? It suggests the underlying demand is still there.
That's their bet, and they see it across the board. Both Hispanic and non-Hispanic consumers share concerns about inflation and costs.
But they're still buying beer.
Well, interestingly, the percentage of alcohol in the consumer's total shopping basket has apparently remained constant, even if the overall basket size has shrunk a bit.
Wow. That says a lot about where beer sits on the priority list, I guess.
It suggests it's pretty resilient, even when spending tightens.
Okay, so that consumer resilience is key. Let's pivot to what Constellation is actively doing. Strategic investments, the portfolio.
Right. So Q1 usually sees higher marketing spend, getting ready for summer.
Makes sense.
And Modelo and Corona are still the big dogs there. Number 1 and number 2, share of voice brands in beer marketing. They spend a lot to stay visible.
And they're focusing that spend on specific occasions, right?
Yeah.
Like sports.
Yeah, high-impact stuff, live events, action-oriented things, football, soccer, Major League Baseball. They see it as building long-term brand health, not just short-term sales bumps.
Positioning for that eventual consumer recovery we talked about.
Exactly. And the portfolio itself keeps evolving. Since their last investor day, they've added things.
Like the non-alcoholic options.
Yep. That's now a number 2 share gainer in a growing category, so good momentum there.
What else is new or getting focus?
Modelo Oro. They adjusted the pricing there to specifically target the high-end light beer segment. Seems like a direct play for share. Sunbrew is apparently doing better than expected, hitting that flavor-interested consumer, and Modelo Chelada Limon y Sal was another successful launch they highlighted.
And are these new things bringing in new drinkers? Younger ones, maybe?
That's a key point they made. They're successfully attracting younger consumers. Their share of sales among 21 to 25-year-olds is apparently twice the sector average.
Twice the average. That's significant for future growth.
Definitely. Management expects something like 20 to 40% of their annual growth to come from these new products. It's a big focus, winning more consumers, more occasions.
Let's talk about Pacifico for a second. That brand seems to be popping up everywhere now.
Yeah, it's a great story. It's now the number 2 brand in Los Angeles, which is its home turf, basically.
But the growth outside California is the really interesting part, isn't it?
Absolutely. 50%, half of its growth profile is coming from outside California now. That signals real national expansion is underway.
Are they planning to push that even harder?
Oh, yeah. They see its distinct demographic appeal and its potential to grab more shelf space. They intend to accelerate Pacifico's growth.
Makes sense. If you're the number 1 share gainer overall in the category like Constellation is, you've got clout with distributors.
Exactly. You're well positioned to gain distribution, get more shelf space, especially for brands like Pacifico and Sunbrew that are showing strong momentum.
You mentioned controlling the controllables earlier. How does that tie into distribution and maybe pricing?
It ties in directly. A critical focus for them is price pack architecture.
Price pack architecture.
Yeah.
Meaning having different sizes and price points.
Precisely. Making sure the products are available at the right price points and the right formats to meet different consumer budgets. Super important when inflation is a concern.
So adapting the offering to the economic reality. What about the competition? Are they seeing more discounting out there?
They acknowledge that, yeah. Increased promotional activity in the broader market. Pretty common when the economy gets shaky.
But Constellation isn't just playing that game, they're being more strategic, like with the Modelo Oro pricing.
It seems so. They adjusted Oro's price specifically to build share in that high-end light segment rather than just broad discounting.
And they believe their brand strength carries them through.
That's the message. Strong brands, strong consumer loyalty, that's what they believe ultimately wins out, even in a promotional environment.
Okay, one last specific point they discussed was the California wildfires. How does that factor in? Seems like a negative.
Well, yes and no. They talked about a pattern they see with external events like wildfires or even hurricanes. There's usually a short-term negative impact, obviously.
Right. Disruptions, people focused elsewhere.
But then there's often a longer-term upside. The cleanup, the rebuilding efforts that creates jobs and, as they put it, interesting beer moments.
Huh. So recovery efforts can actually boost consumption later.
That's the idea, a potential long-term tailwind that's actually factored into their guidance.
But they also mentioned some current headwinds in California, too.
They did. They balanced it by highlighting ongoing unemployment issues there, especially for Hispanic consumers, and construction jobs still being down year over year. So it's definitely a mixed picture for California specifically.
Okay, so wrapping this all up, what's the big picture takeaway for you, our listener?
I think it paints a picture of a company really leaning on its internal strength. Brand power, smart innovation, very disciplined financial management.
To navigate what's clearly a complex and uncertain external world, they seem focused on execution.
Exactly. A clear bet on controlling the controllables and the belief that their consumers will stick with them and that consumption occasions will return.
So to quickly summarize then, Constellation's holding firm on guidance, navigating cost pressures like tariffs through efficiency, and hedging things like the peso really well.
Right. They're leaning on strong brands like Modelo and Corona, innovating with things like non-alc, Modelo Oro, and Cheladas, and seeing exciting growth from Pacifico nationally.
And they believe the consumer pullback is about occasions, not interest, which underpins their confidence in a rebound, all while managing pricing strategically through that price pack architecture.
That sums it up pretty well. Focus on controllables, belief in the brands, and discipline management.
All right. Now for our, let's call it the outrageous but plausible trade idea segment. Remember, purely for consideration, not advice.
Definitely not financial advice. Always do your own research. What's the idea this time?
Okay, so management sounds incredibly convicted that the underlying interest in beer, especially from the Hispanic consumer, is rock solid. It's just the occasions that are down temporarily due to macro factors.
Right, that was a key theme.
So consider this. A long-dated, deep, out-of-the-money call option on Constellation Brands.
Ooh, okay. Bold. What's the specific thesis?
The bet is on an accelerated, maybe even V-shaped snapback in those consumption occasions. Think on-premise, impulse buys, once the macro pressures finally ease up.
So betting on that behavioral reversion they expect.
Exactly. And you combine that potential volume surge with two other factors. The national expansion of Pacifico, which seems maybe underappreciated with 50% growth now outside CA, and their strategic aggression into high-end light beer with Modelo Oro, aiming for share gains there. Put it all together. And you're positioning for a potential explosion in both volume and mix down the line.
So multiple levers potentially kicking in simultaneously if things break right. A behavioral recovery plus specific strategic wins.
Precisely. It's a play on that consumer snapback, supercharged by their innovation and expansion plays. Again, just an idea, not advice.
A provocative one for sure. Which leads nicely into our final thought for the listener.
Yeah.
Well, Constellation keeps focusing on what they can control, right?
Yeah.
While acknowledging all these external macro challenges.
Yeah.
It just raises a fascinating question for all of us watching the market today. How much of any company's success is really down to its own strategic execution versus just being carried or hampered by the broader economic tides?
That's a great question. Where does internal skill end and external luck or misfortune begin? And maybe what kind of leadership actually thrives best when that line is so blurry?
Something to think about.